welcome everyone. This is AI in FinTech and RegTech. This is our New York session, which is very exciting. My name is Jan Choy, and I am the Y ambassador here in New York. I've been in FinTech and data and AI and machine learning stuff for 15 years, and I'm so excited to have an amazing speaker today. Let me just quickly introduce Puja here. Puja Agrawal is a FinTech executive, regulatory compliance expert, and board advisor with over 20 years of experience of driving hypergrowth in both startups, large and public companies. Puja has deep experience in technology and leadership. Her strategic experience spans across sales, go-to-market, product management, and scaling global operations for profitable growth. Currently, as Chief Operating Officer of Americas at Finastra, which is the third largest fintech in the world, Puja's responsibilities include driving growth strategy, transformation, sales, partner ecosystems, go-to-market, and customer success. Prior to Finastra, Puja was a global general manager of the financial market compliance business with NICE Actimize, which is a huge company, I know it, where she led the global business with full P&L accountability and was responsible for the vision, strategy, global operations, and all functions of the business. Puja advised multiple private companies on product sales and growth strategies. She currently serves as a board advisor to Hummingbird RegTech, an investigation platform for fintechs and banks. Puja is passionate about enabling financial inclusion in the world, mentoring startups, and promoting diversity and inclusion in the workplace. Welcome, Puja.
Thank you, Jan.
Take it away.
Thank you, Jan, and thank you to Women in AI for having me here today. And welcome to everyone in New York, or I guess largely the East Coast. I'm very excited to be here today and share with you guys some of my perspectives about AI innovations happening in the world of FinTech and RegTech. And my goal today is to really provide you a wide perspective of what's happening in terms of AI innovations in FinTech and RegTech so that you can walk away from the session and be able to zoom in deeper in areas of your respective interest as well. Since we have people attending from different industries, I want to kick it off with definitions to set a common ground for everyone. So FinTech, or financial technology, is technology that's been designed to really improve the traditional methods of delivering financial services. An easy example, if we think about the retail banking all around us, right, how it's transformed from the traditional brick and mortar branch-based to what we have now, where many of us are consuming all of the banking services from our phones or digital channels. That's a great example of how FinTech has been able to completely change and revolutionize the traditional methods of providing and consuming the financial services. RegTech is regulated technology, and it's technology that's been designed to help the financial services institutions comply with regulatory requirements. The world of RegTech has been growing rapidly for more than 10 years, and again, it's a vast area. One of the growth areas has been anti-money laundering, which is a regulation that has been designed to ensure that illegal funds do not find itself in the society and get assimilated as legitimate funds. And if you imagine what firms have to do to detect all of that flow of funds, you can't do that without really parsing tons of data and applying complex algorithms enabled by artificial intelligence and machine learning technologies. So get you all excited, I wanted to share with you some numbers in FinTech and AI, right, to give you an appreciation for how large this industry is and how rapidly it's growing. So $126 billion is the expected worldwide AI revenue by 2025. And to contrast that with what it is today, in 2020, that number is only $22.67 billion. So you can see overall in the AI worldwide revenue, huge growth is expected over the next 5 years. In FinTech AI market, $22.6 billion is the expected size of that market. And again, in 2020, that number is only about $6.67 billion. So we're expecting in FinTech AI market significant double-digit growth over the next 5 years as well. In fact, the compounded annual growth rate expected in the FinTech AI market from 2020 to 25 is expected to be 23.37%. So that means a lot of growth, more innovations, and more opportunities for everyone, right? So if this is an area of interest, the future is definitely bright, and we're only going to see more investment and more innovations as we get into the future. Now, FinTech is a very vast area with many different subsectors within it, right? With the proliferation of data all around us, AI has and it will continue to shape major innovations that we will continue to find in the world of FinTech. So the 5 areas I've highlighted here are examples of areas that have been revolutionized with AI advancements over the course of last few years, and we will again continue to see that into the future. So I'm going to be diving into the RegTech in one of the sections right after this, but to touch briefly on some of the other areas, InsurTech is technology that has been designed to disrupt the traditional methods of operations in the insurance world, right? And if you think about the benefits, both as a consumer and from an insurance company's perspective, on one hand, as a consumer, I'm able to quickly submit a claim from my mobile device and be able to rapidly get an assessment of that claim versus the approach of having to get on a phone call and wait for 20 minutes for an agent to be able to respond and look at that claim. And on the other hand, as an insurance firm, I'm able to process vast amount of data using artificial intelligence to quickly determine if the claim is legitimate or not, be able to respond to the customer as well as reduce my fraud losses. So this is an example of innovation where really both parties win and the traditional approaches are changing quite rapidly. Wealth tech is in technology that has been designed to serve the wealth management industry, right? And this is, again, another area which has changed significantly from the traditional human-based investment advice to technology such as Robo advisors that are changing how people are making their investment decisions, and in some cases completely through automation without any human intervention. Payments is a really complex area, and it involves a lot of different areas, everything from debit card, credit cards, the acquirers and issuer networks, as well as there are a lot of non-traditional payment vehicles that we use today, right? Whether it's Apple Pay or Venmo or PayPal or what have you. So it's an area that continues to evolve and an area that will continue to see a lot of innovations when it comes to artificial intelligence, because we need to, again, process a lot of different types of data and connect the different networks. And cybersecurity, last but not least, if you think about all of the growth in the digital footprint, with everything that I've spoken about, the more our digital footprint grows, the more need we have to protect those assets from digital attacks. And this is hence the reason why cybersecurity is another area that has grown significantly, and we will continue to see a lot of advancement in that area in the future. So while I just spoke about some very industry sector specific advancements with AI in FinTech, but conversely, there are also some horizontal themes that can apply across multiple segments, right? And some of these are examples of innovation areas that apply across multiple segments within the FinTech world. The first one, conversational AI or chatbots. So conversational AI is something that can be very effective in InsurTech. It could be very effective in wealth tech, as well as some of the other areas that we just spoke about, right? And simply put, conversational AI really is all about machines that are able to communicate with customers as humans would do. And And it's been gaining a rapid momentum because in FinTech, they found conversational AI to be a prime driver in terms of improving customer engagement. So if you think about financial services that are really fighting for customer retention and expanding the share of the wallet of their existing customers, because the competition is quite fierce, right? And that competition is evolving every single day. Then if you've got technology that can really help provide superior customer engagement, that is definitely going to raise the customer satisfaction as well as retention. The other advantage of conversational AI is, as a customer, you have a choice to be having these engagements across different channels, right? And you can also take the engagement from one channel to another without having to start over. So you might be using an online channel, switch to your mobile device and whatnot, and you're able to get that level of service with complete automation. And you could be guided to a human if your case went into an advanced situation as well. Customer behavioral analytics is another area, and there can be many different use cases. The idea simply is, if we think about an entity or a customer, we want to look at all of the data points around that. And if we can apply algorithms to understand it and target specific offerings based on the behavioral patterns we see or anomalies we see in the data, we can use that in many different situations to our advantage. A use case that I've used the behavioral analytics is, if you think from the financial crisis time, from the capital markets world, and you look at trying to understand a trader behavior. So if the challenge is to see, is a trader manipulating the market? Are they providing the best price to the customer? If you can start to look at the usual behavior of the trader, where they trade, when they trade, what they do, and you can start to detect anomalies by parsing all of that data. And if you can do that in a real time, you can actually have the benefit of even blocking large issues from arising and stopping it before it happens. Okay. Fraud detection is an area that virtually, frankly, cannot be done well without technologies like artificial intelligence. And the reason I say that is fraud detection is all about balancing between protecting the assets and the dollars so the firm doesn't lose the money, but at the same time, you need to also balance with the customer experience by not frustrating your customers by blocking legitimate activity. Hence, you need to be able to apply sophisticated algorithms and really understand which algorithms should be applied to provide that proper balance in fraud detection. And lastly, when we think about business analytics and reporting, there's nothing new here, right? On the surface, businesses have been conducting analytics and reporting for years and years, and they will continue to do that in the future. The opportunity here is with the ability to, again, process vast amounts of data and apply sophisticated algorithms on that. The opportunity is to take the businesses with the right insights from a reactive look back method of operation to more proactive and predictive, such that you can use these business insights to determine where your business should be headed and what steps could be taken proactively, and not rely so much on the analytics as a look back and lessons learned approach that many businesses still continue to do. So to give you a very specific example that has gained a lot of momentum, right? Robo advisors in wealth tech. So Robo advisors in wealth tech is a great example of customer behavioral analytics use case. And what Robo advisors have done is it has completely automated the traditional method, human-based approach of investment advice, to the point that investors can make investment decisions completely guided by the machines and without any intervention of a human. In some cases, firms have used a hybrid model where they might deploy a combination of the robo-advisors and the humans, which can be powerful, especially in managing highly complex portfolios where you may not be able to or may not want to completely automate that process. And when we look at robo-advisors, one of the things that really excites me is the opportunity expansion that it has created. Because of the lower cost and the access of robo-advisors compared to the traditional investment advisors, now the reach has expanded to many more people out there, and it can really help with playing the leveling field for people across different socioeconomic status in the society. If we look at the numbers, you can see here, while in 2015, robo-advisors had about $0.1 trillion in assets under management, in 2020, that number has grown drastically, right? Where robo-advisors are managing $8.1 trillion in terms of assets under management. Now, I think that's a pretty impressive number. And if we look at all of the success of robo-advisors and where the future is headed, I expect, if we were to look at a picture 5 years into the future, 2025, the number is only going to be higher. In terms of even the actual returns on the portfolios that have been produced by robo-advisors, the cases have shown that robo-advisors' portfolios have performed quite well. So this is a great example where AI has been applied in wealth tech to take a traditional model and significantly improve that, as well as expand the reach of the investment services that are available to people out there. So with that context in the broad fintech world, I want to dive in deeper and double click now about what the world of AI and RegTech looks like. Okay, so again, give some perspective with the numbers. $76 billion is the forecasted RegTech spend by 2022. And again, if you look back, the number is significantly up from $10.6 billion in 2017. Hence, another area that has been growing quite rapidly. Financial services institutions spend about 10% of their annual revenue on regulatory matters, which can be pretty significant when you look at the numbers of many of the financial services institutions. And the last number, this always raises eyebrows when I share this number with people, but over $400 billion has been spent by global financial services institutions since the financial crisis of 2008. So if you look at the amount of money being spent on RegTech versus the amount of money that's been spent on the fines, you can see the ROI of the RegTech spent is quite high, right? So Paul McNulty, the former U.S. Deputy Attorney General, had said that, right, if you think the cost of compliance is high, think about the cost of non-compliance, which can be about 3x to 5x. So the ROI itself proves for it, and hence why the RegTech market has continued to grow, and we will continue to see new innovations coming in this market. Again, a very wide area. So the innovation areas across AI, you'll see it's a highly fragmented market with many different innovations spanning across. Some of the areas that I've highlighted here are the anti-money laundering transaction monitoring area. And the reason I've highlighted that here is with the traditional approach of transaction monitoring in AML, the cost of surveillance was very high. 95% of the cases would be closed by the investigators simply as non-relevant, not interesting. And what technologies like machine learning and AI have been able to do is really hone in on these cases and significantly improve the quality of the alerts that an investigator would need to review, and at the same time, reducing the noise. So it makes the system much more efficient as well as cost effective. So, I think a lot of these areas we can drill in and look at. Robotics process automation is another area that has a lot of benefits in automating the standard mundane processes while also reducing the errors that might come about the way. One of the areas I was going to drill into is SupTech, but you guys can look into this in the slide later. SupTech standing for supervisory technologies. So it's really flipping the coin and providing similar technologies to the regulatory and supervisory agencies like the financial services institutions have, so that they can do their monitoring more effectively and they can do it in a more real time and an automated basis versus spending several months trying to collect the data and analyze that data. And the last section is really, the last slide is really about, the data privacy laws and the AI and how you find the balance between the two. So GDPR is what's gained a lot of momentum worldwide about general data protection regulation. And also in the US, we have CCPA and CPRA. All of them essentially, right, are really talking about the need to obtain consent to data collection and processing. The other aspect of data privacy and AI and really looking at all of the data is the ability to mitigate the bias in the algorithmic models. And this is where humans can really play a role in ensuring that the data is holistic and it doesn't continue to carry forward that bias. So, to wrap it up, right, what will be the next innovations? And I think while we've seen a lot of innovations, we will continue to see more. And while we have all of these innovations happening in FinTech and RegTech, humans are still needed, right? What we will continue to see is the shift of division between activities and tasks done by humans versus the machines and focusing on more high-value activities that are conducted. So thank you. And Jan, over to you.
Awesome talk. Thank you so much. It was super fascinating. Moderator, should I ask the questions? I see there are some people in the queue. I just want to make sure that I'm doing this right. Okay, I will ask the questions. So Yang asked, how can we mitigate bias in algorithmic models? And I think this was one of the points you made on one of your slides towards the end. Maybe we could expand on that a little bit, and I will go to another question after. And then we do need to wrap up the session at 5:25 so that the next speaker has time to transition.
Sure. So I'll be really short with that then. The best way to really remove the bias is to make sure that we look at full set of data. So one of the issues we have is if you look at a lot of the historical data and train the models on that, the historical models might have biases based on decisions that were made in the past. So we need to train the models on more holistic data set and to make sure that the data itself that we train on doesn't carry that bias, because all the future decisions then will be made on the same. So that would be my super quick answer.
Sure, that is a whole talk in itself. Bias in algos is a very big conversation topic. The next question is from Paulina. She asks, how can you use machine learning for financial fraud detection?
Yeah, that's a great question. Thank you, Paulina. So yeah, financial fraud detection, right? It is a field that evolves very fast. Fraudsters are, the challenge for any fraud detection technology is to be faster than the fraudsters. And by definition of that, machine learning is helpful and essential is because you need to then continue to learn, adapt, and be able to also apply the algorithms to evolving and emerging trends. So anomaly detection is a great method of doing that, as well as profiling different data points to be able to identify emerging fraud schemes and not relying solely on things that you've seen before and completely baked.
So this wraps up our session. Puja, would you like to make any final comments before we switch it over to our next speaker?
I know we're over our time already, so I just want to thank everyone. And I'm happy to take questions afterwards. So feel free to reach out to me on LinkedIn or via the Women in AI channel, and I'm happy to carry the conversation forward.
I know I learned a lot today. I think FinTech and RegTech are such fascinating fields, really rich data sets, but also really rich problem statements. And it's a really exciting area for any AI enthusiasts. Thank you again, Puja, for all your time and all your comments.
Thank you very much.
Thank you.
Take care. Bye.
Appreciate it. Bye-bye.